Gap and crab setup is one of my favorite setups to shorts trading. Very high consistent results on this setup because when gap and crab is not working, we don't lose that much. We know where to get out. But when the gap and crab works, if you get the full gap fill, it's usually a multi bagger. You get 300, 400, even 500% returns on a lot of options. And if you're trading shares, it's one risk to like 4 or 5 reward trade. So you can trade it anyway with options or with shares, whichever you prefer. So Intel had earnings and our plan was simple. In the pre-market, I planned that we're going to short it under 40. Gap and crab setup means crab means short or fail. We were long if the 460 holds. And what happened? We saw the first candle here, try to push, and when a second candle could not push over 460, that confirmed to me that Intel is going to be a short. Other reason is that Intel has been running too much into the earnings. If the fundamentals make sense to you, you could understand that Intel has been running due to many reasons, not something that fundamentally changed because of the government and many of those reasons. So you have to do some fundamental analysis. So that's why a profit taking was highly likely because it had high expectations. That's why you saw that Intel never really recovered and all day was selling for the full gap fill. So this is the gap from the closing to the opening price is the gap, and that's what you're looking for. You can use Fibonacci's, draw the Fibonacci's from close to the open or Fibonacci's from close to the high of the pre-market. You can draw those Fibonacci's and you will see that our targets are always those Fibonacci's, 6.61 Fibonacci, 50 Fibonacci. If I take it a little down here, you can see that we hit our 50% Fibonacci and our 61% Fibonacci. Anyways, how did we trade that? Never hindsight from me. As soon as I saw that, I told the traders the buyer is gone, gap and crab it, buy the puts. The 39 puts were trading at 15 cents, and then our target is always the Fibonacci. And those puts went from 10-20 cents to almost $1 by end of the day. They hit 60 cents by like the first half an hour. It was 500-600% trade. Also, these kind of trades are really good for the small account traders because let's say you have $2,000-$3,000 account, you want to trade a lotto, a couple $100 is good, and you can turn that couple $100 into $700-800. If you're trading with the shares, we were shorting here, we risked 40 cents, but then we're making $2. So you're risking 40 cents to making 5 times, but you have to cover half and cover a little bit and trade it all the way. And you see that MTF rejections, you could reshort it again as well. So that's how you trade the gap and crab, guys. When the gap and crab doesn't work, sometimes it will chop, and when it chops, you need to get out, and sometimes it will curl over the clouds, reclaim the pre-market support, or push over the pre-market highs. At that time, you do not short it, you step away. So there'll be losers sometimes, but our losers will be small. If I'm willing to lose 50-60 cents, I should at least make $2, 3 times or 4 times of the risk that I'm willing to lose. So always remember this in a gap and crab setup. Use this concept. Earning seasons, there's going to be many gap and crabs. Make sure you trade this setup.
Come to trade with Ripster. Join the community at www.tenettradegroup.com.